So let's talk a bit more about the architecture picture, and let's go to the post and store layer and talk about this. This might be a little bit more than we cover in one video, but we'll make a dent here. One thing on the post and store layer, you'll notice that I've included subledgers, expense subledgers, as well as the general ledger, the instrument ledger and financial data store, and the detailed calculation engines. Let's deal with the expense subledgers first. In many businesses, the expense subledgers are the key of the financial processes because controlling expenses is the heart of so much of what they do in particularly manufacturing processes. Customer attributes and such tend to flow in through other avenues and more detailed levels through the source systems. But the expense subledgers are operational systems that finance owns. When it comes to business event capturing, in a certain sense, these expense subledgers do business event capture processes. I've shown them here in this layer because our traditional environment, our traditional architectures have had a close relationship between the general ledger, which has few business event capture processes besides the journal entry, manual entry processes, and the expense subledgers have all been financial systems that the finance accounting department has owned. So in a certain sense, that is why I've shown them here. But this aspect of post and store versus business event capture, the general ledger is obviously typically very highly aggregated. It aggregates all of the subledger detail into a single environment and does typically single records. So transparency is to understand why a balance is the balance, to have the transparency required, means going back to those expense subledgers. So there's often a fairly tight integration that's occurred over the years between these two environments. But the idea behind an instrument ledger is that we get greater consistency across all of the business events across the enterprise, not just expense side of the equation, but also for the customer side of the equation as well, that we can see the revenue side as well as the expense side at a more detailed level. In fact, we can maintain in the instrument ledger, we can maintain expense level detail for specific vendors, for specific fixed assets, anything that we want to maintain at a particular customer, at a particular contract level, can be done in the instrument ledger. So in this sense, the expense subledger could be moved to be in the source system area, or at a minimum in the business event capture area of the architecture picture, moving it out of the post and store process. It, like other processes, could simply capture business events, and all of the posting process could be consolidated into the instrument ledger. Doing so would consolidate and help our instrument ledgers give us greater amounts of detail, would give us greater scale for what's possible for the posting processes, and would integrate our reporting processes in a single place, in a single way, for the reporting processes that follow, rather than having to do the integration process later in the data supply chain. So this aspect of the expense subledgers, whether they're considered as part of the post and store layer or whether they're later in the process, that's something that I think a more advanced, a more aggressive architecture would move that box out of the post and store layer and would store it would show it in the business event capture area or in the source system area. In a later episode, I think we'll talk more about this same concept relative to the general ledger.